Yo, what's up everyone? My name is Andrew Warren, and in today's video, we're going to be talking about some more positive news pieces recently released about Tesla stock. So with today's video, we actually have some interesting insight from ARK Invest on Twitter. We have discussion about new vehicles specifically made in the upcoming Gigafactories, such as in Giga Berlin and Giga Shanghai. And then we also have a news piece regarding discussion from Elon Musk himself about the current Tesla share price, and of course how he feels about this share price upcoming in the future and over these next couple of years. So a lot of interesting news pieces today to talk about, and as I mentioned in today's portfolio update, I wasn't able to do any news videos or any videos in general on the channel this past weekend just because I had a lot going on with the family and stuff because my birthday was on Saturday, so I wanted to be able to spend some time with them and I just didn't have any time to do any videos. So with this, we are playing a little bit of catch up, but for today's video, I think all of these news pieces are from September 28th, which is today, so all of these are very new, very fresh, so it's not like I'm covering something from a few days ago. But if I do find an article that I think is relevant and something that you all should pay attention to, then I will most certainly mention it in a future news video if I haven't covered it just yet. So anyways, with all of this being said, please make sure to smash that like button if you enjoy the Tesla videos, and also let's go ahead and check out the current share price for today for Tesla. We are nearing the end of after hours currently, and Tesla is currently at $419.90 per share. That's 3.40% gained in today's normal market hours, which is $13.86 added on to the share price. And then for after hours currently, we are at minus 0.31%, which is minus $1.30 off of the share price. So anyways, now that we've addressed the current share price, let's go ahead and check out the first news piece for today's video, which is all about some perspective and insight shared by Cathie Wood on Twitter from ARK Invest. So let's go ahead and check out these tweets and then I'll discuss it a little bit further and then we'll move on to the next news piece. As I stated, this is a tweet from Cathie Wood. If you don't know who this person is already, please do some research and check out ARK Invest. See what they have to say about Tesla. Check out their official price targets for Tesla, and I think you will be delighted to see some of those things if you are a Tesla bull and aren't familiar with ARK Invest. So this starts out as the first tweet of a thread of tweets by Cathie Wood. This was around 21 hours ago, so I guess this was one day ago on the 27th, but some of the other things that we'll be mentioning are from the 28th, in which we have some replies answered. So anyways, this starts off by stating, predictably, when Elon Musk announced at Battery Day last week that Tesla would cut the price of a Model 3 to $25,000, several financial analysts panicked, downgrading the stock and or cutting their price targets. In our view, traditional financial analysts have missed the mark. And so before we get on even further, I just want to emphasize that it says Tesla would cut the price of a Model 3 down to $25,000. Just keep in mind that this was actually a mistake by Cathie Wood in her tweet, and Elon Musk has since then corrected it, stating that it's a completely different model. But the point still stands. It's a Tesla vehicle that is $25,000. And so she continues with this, stating, traditional auto analysts are analyzing a mature industry in which lower prices signal trouble, higher inventories, and lower sales. Led by Tesla, electric vehicles are in their infancy, and because of lower costs and prices, are moving into exponential growth trajectory. According to Wright's law, for every cumulative doubling in the number of EVs produced, costs will drop by 28%, suggesting that EV prices will drop below those of gas-powered vehicles on a like-for-like basis during the next 2 years. Analysts following Tesla should be expert in energy storage, robotics, artificial intelligence, and software as service. While they are expert at the internal combustion engine, traditional auto analysts are not equipped to analyze EVs, particularly Tesla. So we'll get back onto this tweet right here because so far, from what I've read, this is the most important tweet to keep in mind. And Cathie Wood continues by stating, according to Sam Corris's battery research, EV sales will scale nearly 20-fold from roughly 1.8 million last year to 35 million, 40% of total global auto sales during the next 5 to 6 years. The auto industry has not enjoyed exponential growth in roughly 100 years. EVs have entered exponential growth territory that will last for the next 5 to 10 years. And Elon Musk does clarify with the whole thing that I discussed earlier, in which he states, we aren't cutting the price of Model 3 to $25,000. I was referring to a future car that will be smaller than Model 3. So this could be more in the compact car territory. I don't know if it will be that small. However, he does note that it is smaller than the Model 3. And then we got another important reply to Elon Musk's reply to Cathie Wood by Viv. I would definitely recommend following her account. It's one of my favorite accounts on Twitter. And so this reply states, think you've mentioned Giga Shanghai and Berlin design centers will both design original cars. Does that refer to the same smaller car? And Elon Musk replies, both will do original cars. And so this thread by Cathie Wood is absolutely huge in my opinion. And like I said, my favorite tweet from this whole thread is where she says, analysts following Tesla should be expert in energy storage, robotics, artificial intelligence, and software as service. While they are expert at the internal combustion engine, traditional auto analysts are not equipped to analyze EVs, particularly Tesla. And this is an absolutely fantastic point, and it's one of the best examples why I think Cathie Wood and her team at ARK Invest are some of the most equipped people to actually assess and analyze Tesla as a company, because as we know in the past, Elon Musk himself has stated that Tesla is basically a bunch of Silicon Valley tech startups, and as we all know, that is very associated with these topics such as energy storage, robotics, artificial intelligence, and software as a service, which are things that Tesla is likely going to capitalize on that the auto industry has never really had any experience before with, and that is because we're seeing such a huge transition from internal combustion engines to EVs, and not only is this a transition from the type of energy that these vehicles use, but with this new energy utilization also comes Tesla, which tends to do things a lot differently than most of your EV companies right now. And yes, we do have some EV companies focused on things such as like autonomy and software as a service and things like that, but not even at a comparable level to Tesla. And this is just something that no one has really seen associated with the auto industry before. And so Tesla has really separated itself from the rest of the EV market in the sense that they offer a lot more things that your typical EV would not offer. And so we have this huge autonomy aspect, we have this energy storage aspect. As Cathie Wood mentioned, you have robotics, in which they utilize those heavily in their factories and with their production lines and things like that. And then with artificial intelligence, you have that probably also associated with their manufacturing, and then of course with their autonomy as well. Software as a service with the full self-driving packages, and also just future Tesla software with people buying a bunch of digital products as autonomy becomes a thing and becomes more popular. So the problem right now, as Cathie Wood states, is that you have a lot of traditional auto analysts that are not even familiar with most of these topics and aren't even really taking this into consideration when it comes to Tesla. So they have no experience or knowledge in these topics to make a judgment off of it. And so this basically emphasizes why Cathie Wood and her team are so equipped to analyze Tesla stock and actually do it at a level that, in my opinion, is much more realistic and analyzes all components of every aspect. So I truly think that Cathie Wood and her team over at ARK Invest are the most equipped analysts in terms of knowledge and things like that to actually judge Tesla in terms of a price target or just in terms of its current share value and whether they think it's worth buying. So I think that thread by Cathie Wood was absolutely huge in the sense that it provides a lot of context as to who is judging the value of Tesla stock right now and who is judging the future value of this company. And as this tweet notes, we're talking about analysts that are not used to judging auto companies in these ways in terms of robotics and energy storage and autonomy and things like that. These are things that have never really been considered when it comes to your typical internal combustion engine. And even with EVs, a lot of these things are still really groundbreaking, in which Tesla is basically one of the only companies emphasizing these approaches. So clearly these tweets emphasize why a lot of analysts just have it wrong and why there's such a big difference between the ARK Invest price targets and a lot of these other price targets we're seeing from these analysts that just don't see the full potential in Tesla. And honestly, in my opinion, there's really just no excuse to not understand Tesla at this point when there's so many retail investors like us that just get it. Yet a lot of these automaker analysts and other individuals just completely doubt Tesla. They don't take a lot of these things into consideration when they make their price targets. And so like I said, it's almost inexcusable at this point for these analysts to not be taking note of these things, because as I've said, a lot of us retail investors have even and take a note of this. And at this point, all you have to do is just do a little bit of research, look up some news articles, watch the big Tesla events like Autonomy Day and Battery Day and things like that, and you'll get a lot of perspective if you actually take into consideration what Tesla is doing as a company. And so for the next news piece for today, we have an article by the Tasmanian and author Eva Fox, and this article is titled "Tesla China Upgrades Assembly Line at Giga Shanghai to Expand Production, Could Export to Nearby Countries by Q4 of 2020." So the article title in itself basically describes the key point of it, so I'll leave it linked down in the description below for you all to check out for yourself. But basically, the Tesla Shanghai Gigafactory is upgrading its assembly lines currently so that they can start producing at a larger level and exporting these vehicles as early as Q4, according to that article. And so this is a major focus on the Made in China Model 3s, in which the article states that we could see some exports to Asia and Europe. And so as we know, Europe would be huge. That's been one of those markets that has been criticized by a lot of Tesla bears in terms of like the actual sales numbers. I know that Gordon Johnson, the biggest Tesla bear ever, has used that point in the past, and we recently addressed that in the newest video in which the Model 3 was actually the highest selling vehicle in August for Europe. So that was good in itself, but I just wanted to emphasize with that article that they are having some assembly line upgrades in the Shanghai Gigafactory in China, which could lead to some exports in Europe and Asia, as it states. And so finally, let's check out the last news article for today, which is all about Elon Musk talking about Tesla and its share price and things like that. So let's get into this article, and then I'll expand on it a little bit further afterwards. So this is an article by CNBC and author Michelle Gao, and it states, Elon Musk, Tesla may be overvalued today, but I think it'll be worth more in 5 years. And so just to address something right off the bat, this isn't exactly what Elon Musk stated, I don't believe, so this kind of is a little bit misleading. But if we get more into this, it states that in a recent interview with Kara Swisher for a New York Times podcast, Elon Musk stated that he thinks the company will be worth more in 5 years. In a direct quote from him states, "Some critical mass of the market has concluded that Tesla will win, I guess. I've gone on record already saying that the stock prices have been high, and that was well before the current level. But also, if you ask me, do I think if Tesla will be worth more than this in 5 years? I think the answer is yes." And then to expand on that a little bit more, he states, Tesla at this point is not in mortal danger as it was, say, 3 years ago. The thing that Tesla has been able to achieve is get to volume manufacturing and have sustainable positive free cash flow. From a car company standpoint, that is the real achievement of Tesla. Tesla should be measured by how many years we accelerate the advent of sustainable energy. And so that's basically the end of the article right there. And as you could tell from the quotes that we mentioned, it doesn't state that Elon Musk himself said that the value of Tesla stock is currently overvalued. So as I said, the article title is a bit misleading. He basically states that he has addressed his thoughts on the share price in the past, and that if someone were to ask him if he thinks the stock will be more than it is right now in 5 years, then he would say likely so. So as I said, it's a little bit different from the actual article title, but it still emphasizes at least that Elon Musk thinks the stock price will be more than it is right now 5 years into the future. Now, of course, that's not saying much considering everything, but still it's a forward-looking statement in the sense that we get Elon Musk actually talking about the share price, being confident, and discussing the fact that they aren't struggling like they were years ago. And so that really just emphasized the difference in investing in Tesla years ago when it was a lot riskier compared to right now when things are very forward-looking and they're struggling a lot less, at least it seems like. But anyways, I just thought that some of these news pieces would be really interesting to talk about. Some of them are pretty important, especially the tweet thread by Kathy Wood where she talks about traditional auto analysts and things like that. So please make sure to smash that like button if you enjoyed the video, and also feel free to check out Robinhood and Webull in the description below. If you sign up with my referral link, you'll get some free stocks, and especially with Webull right now, you can get one free stock valued up to $1,600, and all you have to do is sign up with my referral link and deposit $100 into your account. Keep in mind you can take that $100 right back out after you get your free stocks. So it's basically passive income with minimal effort, and you also help support the channel as well, in which I'll get some free stocks. But anyways, I hope you all enjoyed this video, and I hope you have a fantastic rest of your week.